Hi everybody, this is TJ with the Backpacktrader. In this video, I want to talk to you about the importance of trade plan rules, tracking the proper trade, and getting in sync with the proper trade, trading with the right sequence of trades. And to illustrate what I mean by that, let's look through what happened during this morning's session. We have a typical trade plan for a crude oil trading. We use a 377 tick chart. This is with the Counterpunch Trader, Counterpunch Express 2. One or the other is fine. And this line marks when the trade plan starts at 8:50. So here it is at 8:51. If you look back, there's a trade that had already triggered in. It's set up down here, the price pulled down, hit the entry, and our objective is to get to target 2. If we get to target 1, we're going to move our stop to break even. Or, of course, our stop being down here, we're going to try to move it up if we can. And the thing is that once the session starts, move this out of the way, right up in here at 8:50, we have to get back to our entry in order to get filled. Otherwise, we have to look for the next trade. And it does pull back and touches the entry on this bar right here. You can see it hits it perfectly. Put a line there so you can see it. See that? Touches it perfectly. So right there, you get in the trade. If you don't get filled, you can mark it in. You can hope that it comes down and touches it again, but that's the trade that we're interested in. That's the active trade. Now you'll notice there's a possible short trade coming up, and we have to be mindful of that. But if we're in the long trade, we're not going to take the short trade until we adjust this entry down a couple more ticks. In other words, we want to try to stay long, and we're only going to get short if the price could push through a little further. It's called price action confirmation. We just want a little bit more. And so it does come down and actually touches that entry, but notice it doesn't go all the way through. So if you were not in the right trade, you might be getting into the short trade right here without making that adjustment. And that would be a mistake because that's not what the trade plan says to do. And as it turned out, it would have come up and stopped out here. And notice at this point, it does hit the first target of the correct trade. So now the stop moves up from here to here. Whoops. And we have to do it manually because the indicator thinks that we're short, but we know we're following rules that are part of the trade plan that supersede the actual dots on the chart. The human brain is more intelligent than artificial intelligence sometimes. And in this case, we follow our trade plan. So the stop starts moving up following this line. Notice there's another trade here. If you were in the short trade and you get stopped out, you'd be looking to get long on this purple trade. And that also would have been a mistake. It comes up. It's a nice set of targets up there, but not enough to be able to get to it. And instead, it's going to stop and go down. Had you been in the original trade, staying in sequence, getting in sync with the trade you're supposed to get into, look how it comes up and hits all its targets. And look at target 3. Look how perfect that gets hit before it turns around and goes south. So multiple position traders, you could exit at target 2, target 3. The trailing stop continues to trail up, 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 up per the rules and ultimately would stop out here. And the goals are reached with one trade, one and done, instead of 2 losers in a row. Now, the second loss would have been barely a loss because you would have gotten long here and then flipped over right about after your adjustment a little bit below, but still 2 unfavorable trades. And then you would have done quite well because the next trade wins. And if you still needed another winner to be positive, the next trade wins as well, as you can see. So beautiful session regardless. It's just that there was the easy way, the right way, or there was the harder way, which was the wrong way, based on the rules of a very clear trade plan that's been working for years and years. So again, just wanted to talk to you about the importance of trade plan rules, getting in sync and in sequence with the proper trade, and how things can change if you fail to do that. Thank you for joining me on this video, everybody. Hope to see you on the next one. This is TJ with the Backpacktrader. Don't forget to check out our blog at www.backpacktrader.com. I'll see you on the next one.